Happy Saturday, everybody. I hope you guys are having a great weekend. I had a comment on my page the other day that was like, oh, all houses over $2 million, they're going to crash. And then I actually helped a buyer buy a $2 million house in West Haven. And both of these things culminated in me just going into this deep dive on what is happening in the $2 million market. Is it going to crash? What's happening? Very, very interesting. There is a treasure trove of data out there. And I'm shocked at how little visibility it's getting. But first, I do want to hit a few headlines that we need to keep our eye on if we're keeping an eye on the macro dynamics of the housing market here in Nashville. The very first one, continuing claims. We just went 19,176 as of December 30th. Now, just so you know, this is a almost 23 month high. Look at that. You got to go back to January 19,652 and keep in mind 2022, January, we're coming off the unemployment from the COVID pandemic, and it was trending down. Now we have something trending up, and we are about to break through that 19 number. If we go above 19,600, to me, that's significant. Now, I will tell you, and I would love to get your take on this, but I don't think this is Nashville. Okay, my take is I think this is probably Memphis, Chattanooga. A lot of logistics companies have had a really difficult year in the past year, and I suspect that a lot of this is coming from the logistics industry. FedEx is a huge employer in Memphis, and I think they've been laying off. I've only heard, I haven't read a huge number of headlines, but I know they've been warning. You know, there's a lot of stuff going on. So you tell me, do you think Nashville's unemployment is going up? You know, it still feels hot in Nashville, but you tell me. I would love to hear your take on whether or not Nashville's job market is as hot as I think it might be. I'm totally open to being wrong. Like I said, it's just an anecdote. And you can see here, uninsured continuing claims are going up. What do you think? Okay, let's hit this real quick. This is not inventory. This is the demand. This blue line is demand. All of last year, you can see we finally troughed and now we're moving up. Now, here is the most important point you need to know about this chart. It is moving up very rapidly, and it is higher than it was a year ago. Now, the easiest way to see this is a chart I made, and I posted this on Twitter. Contract volume. This is condos, single families, everything in MLS. Contract volume is up 16% from where it was a year ago. Active listings are basically flat, but they are a little bit higher. You get into Davidson County. Davidson County is higher. Okay. People that are like, oh, I figured that Nashville's going to crash. They're looking at just Davidson County. Davidson County's higher, a little softer there. But the bottom line is, guys, contract volume's higher everywhere. And if you take the ratio, month supply, and you use contract volume instead of closed volume, people use closed volume, you're going to overestimate supply. Closed volume is antiquated. If you're in trending up in contract volume, your closed volume is going to show a lower number and a higher month's supply than what is actually out there. And so, guys, we're actually in a tighter inventory, even if inventory's up just a little bit because contract volume's up. Now, let me go back to this chart and show you one other thing. Okay, it is moving up. It was vertical in January of last year. Okay, we go back to January last year, it was vertical. But look at this. It dropped. The last day it dropped. It went from 1730 to 1708. That is interesting. I am going to watch that because if it's dropping like that, that did not happen last year. So this is something to keep a close eye on. If we don't go above 2,500 in the next 4 to 6 weeks in contract volume, then we could have a very muted spring. Now, combine that with active listings. If we get new listing, inventory, new listings increase relative to last year, and we have a very muted spring, we could have active listings accumulate quite a bit. I don't know if that's going to happen, guys. I really genuinely don't know what's going to happen. I don't know what's going to happen with price. I thought I did a long time ago, but really what I realized is the best service that I can provide you is to show you the market that you're in and to help you navigate what a fair price is in the market that you're in and show you trends. Okay, because the truth is that there's people in DC playing massive money games with us, and they don't even know where it's going to go. They make these decisions, unpredictable decisions, but they don't even understand the consequences of what they do. So that being said, contract volume's higher than it was last year. We've had a pause. We're going to watch this very closely, but as long as it's higher, we're going to have a higher year over year in closed volume, and that's going to be a big bullish sign for the housing market, especially if inventory stays flat. Now, keep in mind, inventory's flat, but the $1 million listings and the $2 million listings, as you're going to see, are way, way up. So we're going to get to that here in a minute. Williamson County, Williamson County inventory is flat. Davidson County is popping up pretty hard. Now, it did have a massive drop, so it's just recovering to where it was. But nonetheless, that's something to watch for. Is Davidson County going to be softer? It has been recently, so certainly something to watch. But even Davidson County, if you look at its contract volume starting to pop. Is it going to trend up? We will see. Now, let's get into $2 million listings, guys. $2 million listings. Here's a real quick snapshot of last year's $2 million listings. So a couple of things you need to see here. One is 729 houses closed with a list price of $2 million or more in Davidson and Williamson County. And Davidson's the core of Nashville. Williamson, I'm going to show you a map in just a little bit. It's just south, but 729 closed. This is up about 7% from where it was just 12 months ago. 681, now we're at 729. So it's grown about 7%. The reason this is important is because closed volume for 2023 in Nashville dropped 15%. So here we have a submarket, a $2 million high-end market that's growing by 7% a year, while closed volume as a whole has dropped 15%. That's huge, guys. That's very huge. You can see we have 306 as of November, dropped off at the end of the year. We'll see. I think it'll pop back up, but 306 at the end of November. And look where we were in November let's just go to November 21, we're 88. So we're talking about like 4X of where we were in 2021. And you can see it's just been vertical, wild how much inventory has increased for $2 million listings or higher. And interestingly enough, if we look at new builds, we can see that new builds are now, as of December, 285. They're almost 40% of the active listings. 40% of active listings are new builds. This is important because you need to watch where new build pricing is going. Here is where median price per square foot on $2 million houses are going if they're a new build. This is very highly correlated, very, very highly correlated with where all new builds are going. You can see they're both about the same. So the reason that's important is because it's been a trend down. Since Q4 of 22, we have been trending down on new builds. And this is what one of our buyers, when we talked to our buyer about buying this house, we were looking for that fair market value. The one we got under contract in West Haven. Let me show you this. We pulled this comp sheet together and we said, look, you kind of want to stay away from that new build. You know, if it's going for $466 a foot, it's a very comparable house to the one we got under contract. We want to be lower than that. And that's why we made our offer lower than the new build. And, you know, it was lower than the list. It was lower than the list offer, the list price, but we explained why. They countered. Ultimately, we came to an agreement. That's why it's so important to look at comps, pull these comps out, this chart. I was super proud of this. We sent this to the list agent and said, look, here's what we're seeing. Here's why we made our offer, trying to be respectful, but we're also going to fight for a good fair market price for our buyers. But look at this, guys. If you are buying a $2 million house, you should expect the median price is $500 a foot. You should expect about $500 a foot. If you do better than that, then you're better than the median price per square foot on a house. Now, the one we did was better than that. And West Haven's been a very strong neighborhood. There's so many good comps in there. It's a great neighborhood to get comps and to see trends. I do like that about West Haven. I do like that. You know, I'm always trashing on West Haven. Check this out, guys. So this is days on market, and this is discount percentage to days on market. So I took the sales price, I took the list price, and I just compared them. And what's the discount? What are people actually buying the houses for that listed? And you can see that the vast majority of houses sell for below whatever their list price is. This isn't really that uncommon. And you can see that even within the first week, a huge chunk would sell 2 to 3% below. That's why in general, if you get through 7 days, you should reasonably expect a 3% off of list in a house that it's where it's listed at. Now, they might have listed it overpriced. You know, there's all kinds of dynamics. Just because you get a discount doesn't mean you got a great deal. But in general, you should look at a house and you're like, oh, that house is $2 million. I should be able to get $50,000, $60,000 off that house reasonably. That's reasonable, okay? And that's certainly what happens, pretty common. Now, you get into 30 days. Look at these 30-day discounts. You can get anywhere from 5 to 15% discount after 30 days. Now, outside of that, it's really just, because they'll drop the list price eventually. Usually I didn't see many drops before 90 days on a lot of these, but they'll drop the list price. But you can see, look at some of these that sold for 20, 25. Look at this one. I cannot believe this. So here's one that was on the market 20 days. They sold it, dropped it 24% from list price. Look at that. The list price was 2.3. They sold it for 1.7. Now, I happened to look this one up because I was like, whoa, that's a good deal. They got it for $339 a foot when, remember, the median's $500 a foot. So let's look at this house. 2591716. Okay. 1.7 million. Beautiful house. Beautiful pictures. Okay, now here's what I want you to see. This is nuts. Remember, they sold this in November for 1.7. It's now back on the market for $2.5 million, guys. $487 a foot. And look at the pictures. They're beautiful. They cleaned it up. I guess they cleaned it up. I mean, they look largely the same. It looks largely the same. I don't even know if they changed anything. I mean, they only bought it 60 days ago. That is nuts. Okay, the bottom line is, guys, you got to pay attention to, if I'm buying a $2 million house right now, you have to pay attention to transaction volume in the neighborhood. Is there demand in the neighborhood you're buying? And how much demand is there? Just like we looked right here at the annualized close volume. Is the annualized volume going up or is it going down? And is it going down because there's no listings, or is it going down because houses are sitting? I can show you some neighborhoods where houses are sitting. In fact, you know what? Let's just pull one up right now. Look at this neighborhood right over here. This neighborhood right here. Houses are just sitting. These houses are just sitting, guys. Okay, this is a $2 million neighborhood, and there's no movement here. Okay, so there are neighborhoods you need to ask yourself: is transaction volume increasing, decreasing, and why? Is it because there's no active listings, or is it because houses are just sitting? Okay, the other thing you need to ask yourself: what could you expect? Discount wise, if it's been sitting on the market, you can look at something like this. You can narrow it down to their neighborhood and just see what. List price to sales price, what's actually happening in that neighborhood. The other thing, last thing, look at new builds. The trend of new builds in the neighborhood that you're looking at will tell you what's going to happen. Just like I give that advice in all markets, look at the new builds. Look at the new builds for these $2 million houses, $3 million houses. What is the price per square foot trending towards? Have they been slowly trending down? Just like we've seen, I think I showed you last week, Witherspoon, I showed you West Haven. So you're seeing there is a trend down, and you can see it just like here. Prices peaked, price per square foot peaked in 2022 Q4. There's been a trend down, and the median price has dropped 10% from where it peaked in 2022. Okay, so you should expect around $500 a foot. Had this been a year ago, it would have been $550 a foot. So just keep that in mind. Be careful out there. You're buying a $2 million house. You got to be careful. And with that, I hope you guys have a great weekend. I look forward to seeing you next Saturday. Have a good weekend.